Today we're going to be joined by colleagues at HMRC who'll be sharing their expertise on value added tax, VAT, partial exemption and its application to academies. So VAT specialist Sean Robertson will be presenting the overview, and he's going to be joined by his colleagues Sue Caddy and Graham Spate, who'll be answering your questions in the second half of the session. So before we begin, I'd just like to remind you that this session will be recorded and that the slides and the record will be shared after the event. So during the event, we welcome any questions, so please feel free to use the chat function to ask any general questions which will be answered during the Q&A session. Our colleagues at HMRC will do their best to answer as many of these as they can, but please be aware that we're unable to answer any questions that are specific to your school or trust. So we might not publish similar questions in the chat. So if there's one that you think is particularly pertinent or useful, please upvote any questions that you'd like the team to answer. And finally, your feedback is really useful for us. It helps us shape and develop future sessions, and we encourage you to use the QR code or the link in the chat to our feedback survey. So I'm now going to hand you over to Sean Robson, who's going to start his presentation.
Thank you very much there. Hopefully people can see me now and can hear me doing the presentation as well. So my name is Sean Robson, as I've been introduced, and I will be the lead presenter from HM Revenue and Customs delivering this presentation today, again alongside my colleagues Susan Caddy, Kelly Joshua Davies and Graham Spate. The majority of ourselves are VAT specialists, and then Susan Caddy, my colleague, is a customer compliance manager, and they are responsible for the compliance of customers within the local authority sector within HMRC, and academies fall within that sector. So this is just a bit of a brief overview of what we're going to cover. So we're going to be covering partial exemption, as stated, covering calculation methods, guidance and contact details, the feedback survey, questions, and then also a little bit more from ESFA at the end there. So if you just want to go to the next slide, please. Yeah, so again, this is just a holding, and then, yeah, thank you very much. So I'm just going to briefly start with non-VAT registered academies. Just for information, this presentation is mostly for the information of VAT registered academies, and that is because partial exemption regulations and legislation do not apply to non-VAT registered academies. But that's not to say that some principles don't apply, and also it's not to say that some of those principles may not apply in the future if you were to be registered. So just as a bit of background, although we covered this in a previous ESFA Power Hour, non-VAT registered academies may be required to undertake an apportionment between business and non-business use when making claims via the VAT 126 process. And this is because although academies that are not VAT registered are able to claim input tax in relation to non-business activities, subject to section 33B, owing to the fact that they are not VAT registered, you are unable to recover VAT in respect of business activities that you undertake. So if you just want to go to the next slide, please. So yeah, just going on to VAT registered academies specifically. So VAT legislation covers that where purchases are made that are used for supplies of both taxable and exempt activities, then there may be a requirement for apportionment through partial exemption, and this is a calculation that is undertaken to determine the amount of VAT that is recoverable in respect of those mixed supplies and recoverable as input tax. So if you just want to go to the next slide, thank you very much. So just a bit of a preamble prior to getting on to the nitty-gritty of partial exemption, just covering business, non-business. And again, this was the subject of a previous Power Hour presentation, which is available on the ESFA YouTube. So this covered off the requirements to undertake calculations for business non-business, which is a calculation that has to be undertaken prior to partial exemption. Although academies are able to recover input tax in relation to their non-business supplies under section 33B, there is a requirement to calculate these calculations completely separately unless you have approval from HMRC through a special method. And the reason that we do these separately in most instances is because where they are combined without HMRC approval, this may result in a distortive effect on the partial exemption calculation. So just a bit of sorry, if you can just go back to the previous slide. Apologies. Thank you. So just to cover off business non-business very quickly. So to complete a business non-business calculation, firstly, you would need to attribute the VAT directly to either business or non-business supplies. And then anything that you can't apportion would be called mixed use or residual VAT. So for example, purchases that are made for delivery of the Academy's free education solely, that would be attributable to non-business supplies because you provide education for no charge. So again, similarly, where you make purchases that are solely to be used for business purposes, this is attributable to business supplies, and this will go into your partial exemption calculation. And then the third and final category is any supplies that you receive that go into the making of your own supplies that are both business and non-business. These will go into your partial exemption calculation as well, as they may need apportionment between taxable and exempt supplies. So just to finish off on this point, there's no specific method for business non-business calculation, only that it is fair and reasonable. So yeah, if you just want to go to the next slide, please, thank you. So partial exemption calculation methods, so the standard versus special methods. So we're only really going to be discussing the standard method in this presentation, and that is because HMRC's view is that the standard method in most circumstances will produce a fair and reasonable result. So unless you request from HMRC the ability to use a special method, we would expect you to be using a standard method. So if you want to use a special method, you can go online, and the steps in which to request this are covered within section 6 of the VAT Notice 706. And again, there is a link to this and also details of this later in the presentation, covering off the guidance used. Yeah, so if you want to go to the next slide, thank you very much. Okay, so we're going to go step by step through the standard method. I appreciate that some of this may not be in very low level detail. It is very much a high level detail aspect, and that's because we're covering mostly the basic principles of the standard method, and also because we can't be too specific while discussing this today, just because there are certain nuances which may be difficult to explain in this medium. So in step 1, you are setting aside any purchases that are used solely for the making of taxable supplies. So any purchases that you use where you incurred VAT, and these will be put towards supplies that you make that are not exempt. So anything that is standard rated, 0 rated, reduced rated. For example, one might say that this could include the sale of clothing, as this does have different liabilities. So if you just want to go to the next slide, thank you. Thank you very much. So this is step 2 of the standard method, and it's very similar to step 1. However, in this point, we are looking to identify how much of your input tax is directly attributable to your exempt supplies. So here we're looking to set aside any purchases that are made solely for the purpose of exempt supplies. For example, and again there are nuances, but as a sort of easy example, this may be certain sporting lets that you make, or certain land transactions as well. So yeah, if you just want to go to the next slide, please, thank you. Okay, so after you have identified the inputs that you have incurred in relation to your exempt and taxable activities. You'll then need to identify how much of your impact tax is residual. So again, this is any input tax left after attributing the input tax directly to either taxable or exempt supplies in steps 1 and 2. So again, this sort of means that any purchases that are used for making both taxable and exempt supplies would fall into this category. And this includes things such as overheads, which may include fuel and power and certain admin costs as well. So if you want to go to the next slide, please, thank you. Okay, so step 4. So because we have this pot, as we like to call it, of residual input tax, which covers both taxable and exempt supplies, we want to look at the percentage of that value which relates to your taxable activity and the amount that you can claim. So you'll need to total up the value of your taxable supplies that you make, so 0 rated, reduced rated, standard rated, etc. And you'll need to divide this by the total value of the supplies made in the period, excluding VAT. And if you multiply this by 100, that will give you the recoverable percentage of your residual input tax. There are some supplies that are excluded from the standard method. And again, this is covered later, but those supplies are specifically covered within section 4.8 of VAT Notice 706, which is referenced later on. These are quite specific though, so we won't be going through them, but there is a list there in the VAT notice that tells you what not to include in your calculation. And again, just for the avoidance of doubt, just because we do complete the business non-business calculation separately, this calculation that you are doing here to determine the recoverable percentage does not include non-business income, so it won't include any of your sort of grants that you receive. So if we just want to go to the next slide, please, thank you. Okay, so the next step, so what you want to do is take the percentage that you've worked out from the previous step and apply this to, again, your pot of residual input tax, and the amount produced, in theory, is the amount that can be recovered. So firstly, in respect of the percentage used for the calculation, just for clarity, this should be rounded up to the next whole number unless your overall residual input tax is above £400,000 a month on average. So if it exceeds this value, the amount that you're applying from your previous step would only be rounded to 2 decimal places. So the amount remaining is your residual input tax that is not attributable to taxable supplies. So that's the amount that's left over after you have applied the calculation. And we'll look at what you can do with this in the next step. So if you just want to go to the next slide, please. So in terms of what you can recover for the time being, so you need to add together your directly attributable input tax to your taxable supplies from step 1 and the amount of recoverable residual input tax from step 5, and that total is the amount that can be recovered in principle. So again, if you just want to go to the next slide, please. Okay, so the next step, so any amount that is directly attributable from exempt input tax, so that's the second step that you undertook, and the amount of residual input tax that is not considered to be attributable to taxable supplies, so that's the amount left over after you apply the percentage from step 5. This is normally not recoverable. However, you need this to calculate whether you are within the de minimis limits. So if you just want to go to the next slide, please. So, okay, so I'm just going to go over the de minimis rules for partial exemption. So there are a number of tests that you can undertake to review whether you are de minimis, and you can treat input tax as insignificant and recover it in full. So the 3 tests are applicable. So firstly, the de minimis limits are that you can be treated as fully taxable in any tax period or longer period if the total value of your exempt input tax, so that's the amount from step 7 where you have added up your directly attributable to exempt supplies, and the amount that we've apportioned from your pot to exempt supplies. So if the total of those two add up to no more than £625 a month on average, and they are less than half of your total input tax in a relevant period, then that would be treated as de minimis. And so the way in which you work this out, is actually two simplified tests and an annual test, which we will cover now. So just go to the next slide. Thank you very much. Oh, apologies, that seems to not be showing that well. I think I've got a bar down the side, but hopefully I can just discuss these and go through them. So these are the two simplified tests. So I'll just read through them just if they're not visible by everyone. So the first test, test one. So the total input tax incurred is no more than £625 per month on average, and the value of exempt supplies is no more than 50% of the value of all supplies. And then test two, so your total input tax incurred less input tax directly attributable to taxable supplies is no more than £625 per month on average, and the value of exempt supplies is no more than 50% of the value of all supplies. So those are the two simplified tests, and I'll just give a bit more on this. So if you pass either test within a VAT period, then you may treat yourself as de minimis, and so you can provisionally recover any, so you can, sorry, apologies, you can provisionally recover input tax relating to exempt supplies. So you do still need to review your de minimis status at year end, and you'll need to account for any under or over recovery as part of your annual adjustment, which we will cover later on. So I just want to go to the next slide, please. So the annual test. So this is the third test. So using the annual test means that you only need to calculate whether you are de minimis once a year, and this can only be used if you were de minimis in your previous partial exemption year. So just to cover off what this means, you can provisionally recover input tax relating to exempt supplies in each VAT period, which means you don't have to complete a partial exemption calculation. Again, as with each test, you are required to review your partial exemption calculation at the year end, and any adjustments must be included within your annual adjustment. So I'm just going to recap the rules here. You can use the annual de minimis test if you pass all of the following requirements, and these are a bit lengthy, but they are included within the VAT guidance, which is available online, but I'm just going to read through them. So you can use the annual de minimis test if you pass all of the following requirements, which are: you have passed the de minimis test for your previous partial exemption longer period, you consistently apply the annual test throughout any given partial exemption longer period, and you have reasonable grounds for not expecting to incur more than £1 million input tax in your current partial exemption longer period. So if you fail to meet any of those conditions, then you must apply the de minimis test within each VAT period. Just want to go to the next slide, please. Okay, so covering off annual adjustments. So again, just because I believe some of it is maybe covered by a bar there, the input tax you claim in each of your periods is provisional, and therefore it is subject to change. So you need to review it at the end of your longer period, which is normally your tax year, because of factors that could affect in each individual tax period and the value of supplies or levels of input tax incurred. So this is your annual adjustment. So the annual adjustment has two further purposes. So you can use it to reconsider the use of goods and services over the longer period, and also to re-evaluate your exempt input tax under the de minimis rules. So your tax year is normally 12 months, and usually it will end either on the 31st of March, 30th of April, or 31st of May, depending on your tax period. If you are a monthly filer, then your tax year ends on the 31st of March. You can ask to have your tax year compressed, correspond with your financial year, if that's easier, and you can contact HMRC to do this. So your tax year is normally the longer period for adjustment purposes, but it can be different in a small number of instances, which are again covered in the VAT Partial Exemption Notice 706. I'm not going to go through those specifically here, just because they are quite specific, but it is there within the guidance. Just want to go to the next slide, please. Thank you. Okay, so how do you actually calculate any annual adjustments? So at the end of your longer period, you should revisit the attribution made during the year and determine whether the purchases have been used in the same way as was anticipated when each return was made. So having reconsidered your use of purchases, you'll need to recalculate the amount of residual input tax you can claim using figures for the whole of the longer period. So that's all the figures that are combined for usually your tax year that you're going to use there. And the method of that calculation is exactly the same that we've seen previously in steps 1 to 7. It's just using all the figures for the entire year. So I just want to go, actually don't click to, I just want to go back previously, apologies. I've gone a bit too ahead of myself. If you just go back to the previous slide, please. No, that's absolutely fine. So with the total amount of residual input tax, you will need to apply the de minimis test using figures for the whole of the longer period to determine whether you can be treated as fully taxable for the whole of the longer period. So any difference between the total amount you recovered as input tax between your longer periods calculation and the amounts that you recovered within your VAT returns is your annual adjustment. So I'm just going to quickly touch here on reattribution. So as a definition, reattribution is where you review the use or intended use in a tax period and compare this use or intended use in the longer period, and you must reattribute the input tax incurred to reflect the use in the longer period. So just going to quickly touch on a couple of things here before we turn to how you would declare an annual adjustment. So yeah, again, reattribution is where you review use and compare this to the actual use or intended use in the longer period as described on the slide. So I just want to go to the next slide, please. Okay, so now it's going to cover off how to declare annual adjustments. So just to recap, any difference between the total amount of VAT that you recovered as input tax between your longer period and the calculations that you have used within your VAT returns is your annual adjustment. So the difference between that declared in your VAT return and that calculated based on longer period is usually declared within the last return of your longer period or the following period. So that's usually in the very last return that you're going to make for that period or in the first one of the next period. So if the recalculations show that you are show that you are de minimis, then you are treated as fully taxable for the longer period. And any input tax that you didn't claim on your VAT returns during this period is an underclaim of VAT. So correctly carried out partial exemption and annual adjustments are not errors when entered in the correct periods, and so these do not need to be notified to HMRC. However, the annual adjustment should not be used to correct actual errors, such as input tax input incorrectly and treated as exempt, for example, when in fact the goods or services were used to make taxable supplies from the outset. So we just want to go to the next slide, please. Okay, so there's just a couple of technical points that I just want to cover in respect to the simplification of the standard method. So these are some changes that were introduced. I appreciate these were introduced back in 2009, but they are quite important to the standard method. So in 2009, 4 changes were made to simplify the standard method, and those are the in-year provisional recovery rates, the ability to carry out an early annual adjustment, so that's being able to carry out the annual adjustment in the final return of the year, a use-based option for new partly exempt businesses, so that's instead of using an inputs and outputs based method, you would use a use-based method, and again how you do this is covered in guidance, which is signposted at the end of this presentation, and it also widened the scope of the standard method. So just a bit more on that. So in respect of the in-year provisional recovery rate, previously taxpayers were required to calculate separate percentages of residual input tax for each return, and then this recovery was provisional, and at the end of the longer period you had to calculate a recovery percentage for the whole year, which is finalised by the annual adjustment. And then again, for VAT returns on or after the 1st of April 2019, you can use your previous year's recovery percentage to provisionally recover residual input tax in each return that you submit. And then again, this will be finalised through the annual adjustment that you complete, and the percentage from that can be used to provisionally recover input tax in the next year and so on. But to be able to do this, you must have completed an annual adjustment in your previous year. So regarding the use-based simplification, again, sometimes the standard method using outputs and inputs does not produce a fair and reasonable outcome. This may be in certain cases, such as where a business is newly partly exempt, so we do allow a use-based option, and again that is covered in guidance. So again, there are a couple of caveats to being able to use the use-based option for new partly exempt businesses, and again I will just go through these, but they are quite lengthy, and again it is covered in guidance. So you can only use the use-based option if during your registration period, which is the period in which you register for VAT, until the day before you start your first tax year, your first year, provided you did not incur input tax relating to exempt supplies during your registration period above, and again it can only be used where any tax year provided you did not incur input tax relating to exempt supplies in your previous tax year. So this is optional, and you can still use the normal standard method if you wish, rather than using a use-based if you are newly partly exempt. The final simplification, the widening of the scope of the standard method. So this isn't actually an optional simplification, but what it means is, and it's quite niche, but certain supplies, including those within items 1 and 6 of Group 5 of Schedule 9 of the VAT Act 1994, which I appreciate is quite specific, mainly covering financial instruments such as shares and bonds, which may not apply to yourselves, and supplies made from overseas establishments are catered for by the standard method, but would be excluded from the values-based calculation, irrespective of the place of supply. So values-based calculation simply means your total sales and purchases excluding VAT. So wholly or partly related inputs on these supplies are instead ring-fenced and are recovered on the basis of the use of purchases in making UK taxable supplies and certain foreign and specified exempt supplies. So just to confirm, all remaining input tax will be recovered using the output values based calculation we've gone through, which is the steps 1 to 7 of the standard method. So if you just want to go to the next slide, please, thank you. Okay, so again, I'm just going to cover some nuances of using the standard method. One of those being the standard method override. And the standard method override deals with circumstances where the standard method doesn't produce a fair and reasonable deduction of input tax. And this is generally because the result of the standard method differs substantially from the deduction based on the use or intended use of purchases made for taxable supplies. So you'll not normally need to carry out an annual adjustment to establish if deduction is substantially different between these two methods. And again, what we mean by substantial is if the difference between these two methods exceeds £50,000 or 50% of the residual input tax and £25,000. So just to cover off very quickly, you would use the standard method override. If you are partly exempt, use the standard method and your residual input tax is more than £50,000 or £25,000 for group undertakings by members that are not within the same VAT group, and the standard method does not give a fair and reasonable reflection of use. So when might the override apply? So some examples, and again, these are sort of just generic examples of when the standard method override may apply. And this is where you incur high costs in one year, which doesn't actually result in any outputs for that year, but they're actually in the following year. And again, also where high value transactions are undertaken, which do not consume input to an extent significantly greater than transactions of a lower value. And again, another instance where it might apply are costs that are incurred, which relate to an intended supply, which never actually happens. So we won't specifically go into how to apply the standard method override, but this can be found within the partial exemption VAT notice 706 and also within the partial exemption VAT manual, which we have linked at the end of this presentation as well. You want to go to the next slide, please. Okay, so again, this is sort of just a very basic example of the application of the standard method as we sort of round things out. So the example used is a generic example. It's not specific to academies, but it does highlight the principles that we would use when undertaking the calculation. And again, you can always pause this and go through this and work through this yourself, just because the response to this is on the second slide. So if you just want to go on to the next slide, please. Thank you very much. Again, so this is just going through the workings of that example on the previous slide. So the previous slide gave you a breakdown of figures that would be used to undertake a partial exemption calculation. And this is just working through how those would apply to the calculation that you've done, going through steps 1 to 7 and ultimately working out the level of input tax that is recoverable. And again, if you just want to go on to the next slide, please. Okay, so this is just the final outcome of the basic example used. So this is just showing how the percentage is worked out through those steps 1 to 7 that we've been through, and showing how the percentage that you would apply to your residual input tax would be calculated and then applied. Yep, and then so again, you would use that to look at the amount that you can recover. And again, also it says in this particular one that the de minimis test is breached, so there would be a restriction on the level of recoverability. And again, this is recorded and the slides will be shared. So I appreciate that I have given a bit of a whistle-stop tour both through the example and through some of the aspects of partial exemption, so you can work through it yourself at a more leisurely pace in the future as well. Appreciate that. So if you just want to go to the next slide, please. So again, this is mostly covering the guidance that is applicable to the specific issues that have been discussed during this presentation. So again, I've mentioned it a number of times, but VAT Notice 706 is the principal place of guidance for partial exemption. and this covers off how to undertake calculations, certain nuances in carrying out those calculations that would be applicable to the academy sector, and also where you can approach HMRC potentially to request a special method as well. So there is that, and then to supplement this, there is also the PE VAT partial exemption guidance manual. So this is one of the a number of VAT manuals that are published by HMRC that provide supplementary material to the VAT notices, and sometimes provide a bit more information that is covered in this VAT notice, covering off some specific issues. And then again, just that final one there, the VAT business non-business manual. I know we only briefly touched on this at the very beginning, but this again covers off your obligation to carry out a business non-business calculation and the principles behind this as well, and how to do that. And that was the subject of a previous ESFA Power Hour presentation. So if you just want to go on to the next slide, please. So just going to go over a couple of details for contact details. So as always, with all of our customers, in the first instance, we would expect them to contact the VAT helpline on the number stated on the slide, and this can also be found available on the gov.uk website. And so this is the helpline that we would encourage customers to contact to discuss certain VAT issues prior to potentially contacting ourselves on anything specific, just because VAT is a self-serving tax, and we do expect you to carry out your own investigation prior to contacting us. But we do appreciate there may be some instances when you need to get in touch. And again, there's VAT online services, so a slightly different number, but this is in respect of any issues you may have in logging into your government gateway accounts and aspects like that. So that's a separate helpline that you can contact to cover that. They aren't able to help with specific VAT queries as such as liability and aspects like that, but they will be able to help with IT and technical issues. And then again, just another bit of contact details and a bit more specific, and relates to those unregistered academies, and that is the number for the VAT 126 team. So that's the team that process VAT 126 refund claims made by non-VAT registered customers. So they'll be able to help you in terms of specific claims queries, but they're not able to help you with gateway or access issues. And again, we would advise that if you have access issues for your government gateway account, that you contact the number ending in 3701. And then again, just the final piece of contact details. And again, obviously we'll be sharing these slides, and also is being recorded just in case you aren't able to note this down quickly now. But if you contact the mailbox shown on the screen here, mailbox LA sector at hmrc.gov.uk. So VAT registered customers can contact HMRC, and you will be put in touch with a compliance officer that will be able to assist you. Unfortunately, this isn't available to unregistered customers in this instance, but again, you can use the contact number above for that. But again, as with all VAT issues, we would expect that prior to contact that you have done your own research if you are stuck on an issue, and that you present to us what you have researched and what the specific issue is when you first come to us. And when making contact, you may be asked to fill out a short template just to cover off what the specific issue is, what you've looked at, and what issue you would like resolving as well. So that's the end of that, and I think just the next slide is question and answer. If we go on to that, I appreciate that there may have been numerous questions coming in throughout the lifetime of this presentation, which my colleagues have been diligently looking to answer. And again, sort of just to reiterate the fact that certain questions, if they are specific, we may not be able to answer them, and if they are in such high detail, again, we may be unable to answer them, and we would direct you to the appropriate HMRC guidance prior to making contact. But also, again, if you do have a specific issue relating to your academy or academy trust, you can contact us using the contact details on the previous slide, just because we're unable to discuss anything that is specific to your academy, and that's just for GDPR regulations. So is there any questions that we just want to go through? So I think there's a couple of questions that have come through, so I'm just going to have a look at the most sort of upvoted there and see if we've got any pardon. So I'm just going to have a look at that. So I'm just going to have a look and see what some of these count. So some of them we have had answers to. So does student catering income count towards the £85,000 worth in terms of VAT registration? And so Graham's come back and said that no, catering to school pupils is regarded as closely related to the supply of education and is not a taxable activity, so it would not go into your calculation when working out if you are required to undertake a VAT registration. Apologies, I'm trying to find the ones that are most likely, but so there's a couple of things in here. So apologies, I'm just trying to get the ones that are fully liked. So would it be possible to share the common types of income expenditure in schools and its treatment to share with finance assistants at all schools to assist financial accuracy? So I'm assuming that's potentially something internally with the schools, and that's potentially to do with types of income that you may receive or expenditure that you incur, and what sort of VAT liability that may apply to those. So within some of the guidance which we have referenced, it does cover some common types of income and how that is treated and whether it is closely related to income and expenditure. If you do have specific issues, then you can contact us to discuss that. But again, if it is sort of specific, we aren't really able to comment on a case-by-case basis. Apologies, we aren't able to comment on a sort of generic basis, but we could comment potentially on a case-by-case thing. And again, we would expect you to look at guidance specifically. Apologies, I'm just trying to look through the chat. Okay. So apologies, I'm trying to look for the Q&A, but my colleagues are actually passing questions to me. So please confirm for each if it is a VATable supply or not. So are sports club of any nature treated as outside the scope of VAT, provided at cost, such as kickboxing or cadets, sales of uniform PE kits, 0 rated or standard rated, sales of books, planners, reading records and revision materials at cost? Are these outside the scope of VAT? Recharging costs towards Duke of Edinburgh, examination resits fees at cost, recharges for lost IDs at cost, sports coaching cost recharged. So there's quite a lot in there, so it's quite difficult to sort of go through things specifically. So in terms of certain supplies that you may make to individuals or sporting lets, so again, a lot of that is actually covered within the VAT sporting notice, so that's the sports notice 701/45, and that will give you a detailed breakdown of the liabilities that would apply to sort of each of those. Again, sales of uniforms, PE kit, and other bits and pieces. Again, it may depend on the specifics of it. Again, there's certain instances in terms of uniform specifically. If those are of a certain, if those are designed for a certain age category, then that could affect the liability of those. So generally they are seen as business activities, but again, we would ask you to sort of consider in terms of whether it's business or non-business. You should look at the principles in which you are charging. So generally, things that are given away for free may be seen as non-business. And again, it's really sort of looking at whether it would fit the guidelines covered in the VAT business and non-business manual, which does outline HMRC's perspective on whether supplies are business or non-business, and whether they are a view for remuneration. So that is sort of covered there. So other bits and pieces, again, examination, receipt fees. Potentially, again, this may be closely related to education here. I appreciate there's quite a lot in there, but I would advise you for these to look at VAT Notice 701/30, the education notice, and VAT Notice 701/45, the sports notice. Just again, having a look. So please can you advise if income generated from lettings for an academy is exempt? We are currently setting up a MAT and are unsure if we should register for VAT or complete VAT 126 forms. We do not generate incomes through lettings. So I'm not entirely sure what the specific issue is on that. If you are generating income from those lettings, then you may have to consider whether you are making exempt supply of land. Or if you are making a taxable supply of sporting services or exempt supply of land. But if it's read as is, you do not generate income through the lettings, then that wouldn't look to be a taxable supply. Again, so in the non-business income, can we include grants? Advisors have suggested that we can, so yeah, that would include that. So I believe there was another one in respect of the VAT 701/19 that says fuel for primary purpose, 60% qualifying use. Can this be ignored, and does this apply to partial exemption calculation? And I believe that has actually been answered within the chat by my colleague Graham. Again, let me know if that's not the case. I've also been advised that the link to the feedback form may not be working, so I think our colleagues in the background may look at that. So how does capital expenditure affect the P calculation? Is there anything else to consider on this? So there may be quite some specific aspects on that to consider. I don't know if maybe I could ask yourself, Graham, if you might be a bit more clued up on that one on mine. I apologise for putting you on the spot there.
Sorry, apologies, Sean. Could you just repeat the question? I was just typing out a response.
No, yeah, I do apologise. I know my colleagues are working hard in the background to answer questions. So, how does capital expenditure affect the partial exemption calculation? Is there anything else to consider on this?
It very much depends upon what the capital expenditure is being used for. If it's going to be used for a business purpose of any kind, then it would need to be considered as to how those costs for that building are being consumed for those business activities, whether or not there is any taxable activity would give rise to any further deduction. But it very much depends upon the capital item and how it's being used. If the building is going to be wholly used for just teaching the students or pupils of the school and nothing else, then that wouldn't have any business activity per se, if that's the intention at the start. But it is very much dependent upon the use of the building itself. So we'd probably need to understand exactly what the building is before we could give an actual answer on any building per se, I'm afraid.
Yeah, no, thank you very much. I appreciate that, Graham. Very well described there. So again, as we sort of said, if you do have any specific issues, so if you have any capital expenditure that's coming up or you're undertaking and you're worried about the impact this has on your calculations, again, you can contact us using the contact details that we've provided in respect of this presentation, and we can look to assist you with that. I don't appear to have any more questions that have come through, but I believe my colleagues are answering those in the chat. So that will give sort of we're trying to respond to those as we can within that chat, and any that we don't get to within this presentation verbally or typed from my colleagues, then we will look to answer these separately, potentially in a Q&A document, which we can publish later. But again, just to reiterate that if you do have any specific questions, then we would ask you to contact us using the contact details that we've shared within the presentation. So I think unless there's any more questions coming through specifically that want to be responded to verbally, that might be it for ourselves. Yeah, I don't know if my ESFA colleagues want to come in and sort of round out the...
Yeah, of course. Thank you very much, Sean. Thank you. So thanks a lot for that, and thanks to those of you who answered the questions and to those of you in the chat who asked all your many questions. So just to remind you guys that we've got the feedback form. Apologies, we posted the wrong link previously, or a link that didn't work, but there is a new link in there, so you can use that to give us any feedback about the session. And for next month, we've got Power Hour hosted by the DFE School Commercial team, and they'll be talking about get help buying for schools, so end-to-end procurement support for your school or trust, risk protection arrangements, and an update on that service, building schools and trust commercial capability. And there'll also be, again, a question and answer opportunity for the school commercial team. So thanks again for your time, and just one final reminder to complete the feedback form if you haven't already. So thank you very much.